All right. Good morning, everybody. Happy Tuesday. This is the morning show. Spencer Israel, Steve Strazza, Alfonso DePalos. No JC this morning. Very sad. He'll be back tomorrow. He's off doing family things. I don't know. Whatever a guy with 3 kids does on a Tuesday. I don't know what kind of life he lives. But we got a lot going on. In case you're wondering, we are still in a bull market. So another day, another bull market. Jeremy Schwartz is our guest today. He is the Chief Investment Officer at WisdomTree. He'll be on at 9. Very excited to talk to Jeremy. He sent us some great charts. And we'll talk to Kenny Glick. And I feel like yesterday we went long. Maybe today we'll try to get off before the open. We'll see. We'll see where the morning goes. We're talking about some highlights from the All-Star Charts mid-month conference call last night. If you haven't seen it yet and you are a member, it is in your inbox. It is on the site. If you're not a member, well, we're not going to give you the goods, but maybe we'll share a couple of things if we're nice. So that's what we got going on this morning. Shall we run it? Andrew Thompson? Yes, Brian. It is a Strazza show. Very good observation. All right, let's run it. Drop me a like, please. And here we go.
Hi, Spencer.
Hello.
Oh, Strazza show today. How nice.
That's right.
Welcome, everyone.
Welcome, indeed.
JC is at the beach celebrating his daughter's birthday.
Oh, see, I knew it was something. I just didn't know what.
So he called me at like noon. Hey, I need you to do the call tonight. I get excited. That's an honor. I love doing the calls. So I'm like, sure. Yeah. But I'm like, what happened? Because he's just telling me a couple hours before the call. Oh, it's Alexandra's birthday. We're going to the beach. I hear him. He's already in the car.
He's already on. He's walking onto the sand. He's like, he's hot. Steve, I need you to do the show. Hot.
Right. You know? I'm like, yeah, I got you, but you could have told me last week.
Yeah. All right. Cool.
That was fun. Guys, the big story of the day is they're pumping them. You know, have we been obnoxious enough about our feelings about altcoin summer, Spencer? What do you think?
I don't actually know. I don't know. I know. I actually
do more?
I cannot believe I'm saying this. I actually don't think that you have been obnoxious enough about altcoin summer. There's more room for obnoxious is what I'm saying.
No, I appreciate that. That's good feedback.
Yeah.
We'll do more. We'll do better.
Yeah.
You know, I was going to put a note out on Solana. I was traveling this weekend, never got it out. It took back those VWAPs. We've been talking about it. 150, 160 was really the level, but it's more than that. Solana is the best tech in this exciting new asset class that is crypto. A lot of people would just give me that, and I wouldn't get too much pushback. Solana is the best tech. Solana is where all of the cool things happen. You go through them.
That's what they tell me.
Consider them the gatekeeper of some of the coolest technology in the digital asset space. A la, I don't know, something like NVIDIA. Solana currently, hear me out, just breached the 100 billion market cap mark. It's been there before, hasn't really been able to sustain it. I think it's going to $1 trillion. I think it could very well go to $1 trillion this cycle.
Well, top of my head.
Solana went way from about 10 to 200 already, just a few years ago. Go look at its performance last cycle.
And we are at 108, give or take, right now.
To think that this thing can go from 200, where it is today, to 2,000, not crazy. That gets you into the $1 trillion club. That was my math. Check my math.
All right. Well, we're at 108 billion, give or take, right? Right now.
10x that thing. Solana to 2,000 $1 trillion club. This is the most exciting crypto out there. This is the growth stock that you have to own as a crypto investor. This deserves an overweight position in everyone's portfolio.
Remember in prior cycles when people would say, I'm not bullish Bitcoin, but I am bullish blockchain. That was like the cop out. This is sort of the play for you. if that's you, this is the play for you, right? Is you're not bullish Bitcoin, you're just bullish. It's the underlying technology. Well, that's Solana, right?
Fucking hate those people. Look how smart they ended up being. Right? Like, leave the government out of crypto. Oh, DeFi, DeFi, DeFi. Get out of here.
I don't know.
Hey, guess what else? Coinbase, officially larger than the New York Stock Exchange, breathing down BlackRock's neck. Charles Schwab. Coinbase is about to be one of the largest financial companies in the world. People were laughing at it just a few years ago.
You keep talking like this, and one of these days, crypto is going to become systemically important. And actually, that might not be the most fun day. So
this is a great question. This is a great fair comment. Didn't Strazza sell? I sold my soul.
Yeah.
I talked about it. I also talked about what it would take to get me back in. And I think I've been pretty loud about building that position back. Same size. We're back in the soul. It was all about the VWAP from the highs. I started dipping in, but then just recently when we took out that VWAP, comes in around 160. Big old position. Once again, my anchor in my crypto account. It's really one of the largest holdings I have, period.
Nice. All right, let's do some state of the markets, and then we'll talk about whatever else we talk about.
Let's go. And it wasn't a few months ago. It was quite a while ago.
That's okay. Solana's up. I guess we'll start with Solana, up 2% this morning. Bitcoin up 1.5%, ETH down 1.5%, Cardano down 1.5%. What is it with the 1.5% this morning? What's going on in the futures? Anything good? Not really. As I look over to my left screen, not really. The S&P 500 futures up 0.04%. Nasdaq up down 0.03%. Yeesh.
Do you want me to go through my watch list, or you got it?
I mean, there's nothing really interesting. Crude is down 0.35%.
Spencer, read off the damn futures, would you? Let people just decide what's interesting.
You want the level, or you want like the change? I mean, none of them are. They're all more or less unchanged. Everything is up or down, like less than 0.5%, right? I mean, in some cases, like I said, the Nasdaq and the future and the S&P futures are.
S&P futures are literally unchanged. That's incredible.
Yeah, it's crazy. Dollar index up 0.02%. Is that data right? 0.02%.
I'll give you some currencies. Euro unchanged. Why is everything unchanged? Is TradingView broken?
That's what I'm thinking.
Listen, you know what looks great still? Commodities, copper. After a little corrective wave, and through last week, looks like it's powering higher again out of this massive base. Look out for energy. I really think energy wakes back up. Crude oil's at a pretty big level here. You got the VWAP from I guess the Q1 highs. It comes in right around 67. We're trading just below 66 here today. I always look to the derivatives, heating oil, gasoline, for a read on crude. They look slightly better, right? So I think energy does eventually catch up to kind of this awakening that we're seeing in commodities markets right now. Silver, new highs again today. I think you're getting a fresh leg up here from the metals. If you look at gold, it was so good for so long, but really we're building up some energy. We've been going straight sideways for 3 months in gold futures. If you look at something like GDX, right? So take a look at the miners. I always, I'm wondering, what's the leveraged vehicle to play this theme? GDX coiled up here too. Looks like it's ready to pop higher out of this flag. So I think the precious metals look pretty encouraging. Over in Europe, not like I said, not much going on currency markets. Really nothing in the international indexes either. Something like the German DAX. What are we doing? Down slightly here today. Oh, DAX is down 1%. That's neat. It's a question. Do we see this same rotation internationally that we keep seeing in different segments and areas and thematics in the United States? What do I mean by that? Growth stocks. In the US, it's not really the Mag 7s anymore. You want the spicy growth stocks, the ARKy stuff. What were we just talking about at the top of the show? Altcoins. Do we really want Bitcoin now, or do we want Solana, Ethereum, and the riskier stuff? I think it's the same when you look internationally, right? Do we really want Germany and Japan and all the developed stuff? Emerging markets, frontier markets seem a lot spicier to me. Vietnam's the top performing country off of the April lows. So I think you want to continue to move out on the risk spectrum. We talked a lot about that last night on the call.
Oh, by the way, before I forget, total crypto market cap, Steve Strazza, $3.94 trillion. We're knocking on the door.
Nice.
Yeah.
Look, it's a bull market out there.
Oh, yeah.
That's all I got. Looking through my news now.
We're going out. We're going out on the risk spectrum. We've been on the risk spectrum. We are staying out on the risk spectrum. I saw the I was reading the All-Star Charts email before it went out this morning. I think it goes out in a few minutes. Talking about, I think there was a few charts from last night in there talking about small caps, right? As an indication that we have more room here. Home builders, same idea. Right. So it's not as if like everything has gone. It's just that it feels like everything is gone. Right. But they haven't.
Participation is broadening, right? It's not narrowing, it's widening. Right. For sure. More and more things are working today than were working at the beginning of the year.
Well, that was 7 months ago. Sure. That was a long time ago.
I would say, Spencer, more things are working today than at any point this entire cycle. Breadth is as good as we've seen it.
Yeah. Yeah.
Shout out solar energy stocks.
And if breadth is expanding, it means that by definition, not everything was working before. If more things can be working now, right? So
you own the solar edge, Spencer, the sun run.
Dude, I saw the sedge. What was it? What I saw this morning was that this is what I read. It was like solar edge is up on an upgrade. I was like, get out of here.
Spencer,
Susquehanna raised their price target from $14 to $26, and Solar Edge is up. Something about 1%. Who cares? But as if I care about a Susquehanna price target or rating.
Some of these price hikes you see, I know you see them come across your desk every morning too. You know, Bank of America maintains raises price target to 32 from 30. It's like, who's bored at Bank of America?
Yeah. Nothing.
I'm going to read that note.
Nothing beats the downgrade coupled with a price target raise, or vice versa, a price target cut coupled with an upgrade, right? Those things always make me chuckle.
I actually do like people send me. You send me a sell side note just yesterday, didn't you?
Somebody sent us a note. I don't know why. So I just
what was the stock again?
You're the only person I thought would care. It was DraftKings.
Dude,
I wasn't going to read it.
I'm so bullish. DraftKings. I don't even need to read it. Sometimes you just know, Spencer, zoom out when you're doing fundamental analysis. It's not about this company's growing at only 10% this quarter and its peers are growing at 15%. Yep. Fuck all that. It's sports gambling, online gambling is a brand new mega trend, and it's everywhere. And these guys are the industry leader. That's fundamental analysis, right? That's the way to do it. Big picture. I think DraftKings is about to break out and rally into earnings.
Are we heading towards the universe where like anything related to money, whether it's investing or trading or sports gambling, is all under just one app, one company? Like BlackRock owns it all, Robinhood, Schwab, they all just Coinbase, they all just do it. Everyone just does it all. I don't know. Why do we need a separate app for sports betting? I mean, I know why, obviously.
So DraftKings recently, I think, purchased a.
Like how soon until I can buy DraftKings stock on DraftKings is what I want to know.
Didn't they just buy like one of the other gambling platforms? Like
sure, probably.
DraftKings.
I mean, yeah. Speaking of S&P 500,
betting markets. Yeah, it bought one of the betting market companies.
Okay, yeah, sure.
Who was it?
I don't know. There's two. I can't keep track. There's too many.
Wasn't it? Chat, can you check me? Did I dream this?
When in doubt, ask. I'm not going to ask it. I forget it. I don't care.
Okay. It's just talks to buy Railbird. I think that'd be a great move. Yeah. Railbird. Have you heard of that one?
No. Although I'm not like the most well-versed in the sports betting sphere. You know, I do it
like Flutter again, Spencer.
That's FLUT. That I do know. But
new all-time highs. New all-time highs. Stock just broke out. Looks fantastic. It's a lot better than DraftKings, actually.
that is, I hadn't looked at that for a while. But yeah, all-time highs. I mean, war hate. What is that? February? All-time
Spencer,
highs? Yeah.
China, yes or no for you?
In terms of, do I own enough of it? Do I own it? No. Would I own it? Yeah. Sure. I guess I'm not on my crusade. I'm off the crusade bandwagon, but I mean, they look. I've owned it in the past. I've owned it several times. I've owned it on your recommendation and others.
Spencer,
I
stop.
don't own it currently. So
Alibaba, we talked about this.
well, no. That was 6 months ago.
6 months ago. What are you investing for? You're
Yeah.
investing for the next 6 months?
Yeah, sure. Why not? I'm actually, yeah.
We said then
if you liked it at 148, you should love it at 120.
We said, Spencer, this is the perfect vehicle for you. Alibaba, oh my God, the Amazon of China, completing a primary trend reversal. Do we have the BABA chart? I would love to just show the BABA chart. This is a beautiful.
Well, the thing is, it's like by the time I got
we-
around to it, I wasn't going to buy this thing at 140. You know what I mean?
Stop it. All I hear is excuses. It's there now, 120, set up perfectly.
Yeah,
Take
you're
a
right.
VWAP. You got the VWAP from the prior cycle highs. Could you find a better blue chip vehicle to bet on a brand new bull market for Chinese equities? There's not a better one. BABA, brand new
right.
trend reversal. This is exactly where you want to
All
buy
right.
it.
I'm going to. All right. I got some things to take care of. After the show today, I'll go in there and I'll do some stuff.
So this is called accumulation, right? So you see a prolonged downtrend phase, Alibaba from 300s to almost 50, right? And then several years spent just basing, chopping around, wearing out anybody who tried to buy this stock. Everybody's gone now. And it's taken back the VWAP from the prior cycle highs. It tells you that the average buyer is now back in control of this stock. A brand new uptrend is underway. I think it's going back to 300. These are the AI plays of China. Alibaba, Tencent, Baidu, right? These are the Mag 7s. These are the anchors. This is a blue chip.
Actually, I would say,
yeah.
I would say in my defense for not owning it, this right here, right now is kind of like the perfect entry, right?
That's my point.
Right.
That's
okay.
my point.
If you don't own it, that's okay. A, you're with me, and B, this is kind of the perfect entry. Not 2 weeks, not 2 weeks ago, not 6 months ago.
You could set a tight stop like at that gap, $5 from here, right? Limit your risk real nice. And then you're only involved if you're right. You spend $5, right? Whatever. And then multiply that however many shares. And then you're only involved if we're right that this truly is a primary trend reversal. You're only long above 120. You're only long if we're taking out this VWAP, this blue line here. You're only long if we're making new highs and climbing up the right-hand side of the space. And who knows how high it goes. And then you look back one day and say, how smart was I? I own the best stock in China. Everybody talks about it now. They talk about it like Amazon. And I bought it as soon as the trend reversed. Anyway, some people like that kind of stuff. Some people will watch the show probably for that kind of stuff. How many people are going to go buy BABA this morning?
Hey, there's a lot worse you could do right now, right? So
look, FXI, highest level since March. The Chinese tech index is completing similar reversals. There's some really spicy stuff in China. You have a lot of options in China. They have these very, very, very speculative growth stocks. They have a equivalent for every kind of industry group, thematic, anything that you could think of here in America. They even have like eVTOL companies, something like eHang. Have you seen Archer and Joby?
Not China. Now you're moving.
Archer is on some serious failed breakout alert right now, and I think you do have to be careful out here today. I bought some
that monthly in Joby. Whoo, boy, that is a big one.
Yeah, so today I'll be watching really closely. Are they going to come out and reverse it? Right, we've seen this time and time again. We talk about it. I feel like so often on here. In these, the best periods of bull markets, it's hard to get bearish follow through. In other words, one big red candle, one nasty session. Typically, they come in the next day and they buy it up, or you get an ugly morning the next day, and by the afternoon they're buying it up. Right? That's typical, classic bull market behavior. Yesterday, some of the most speculative, growthy, I'm going to call them shit stocks, right? Just the absolute trash bag stocks. Things like SoundHound, SoundHound's down 8-9%. Like these stocks were getting absolutely destroyed yesterday.
Yeah.
Do the bears follow through today? Is my big question. On the most speculative, areas of the market that got hit hard yesterday, are they green today, or another big red candle? That might tell you, hey, maybe lay off the ARK stuff for a while, right? Let it chill out. ARK has come a long way in a short time. Let them dance. A little backing and filling never killed anyone, right? But you don't want to be there in some sort of short-term trade when it happens. Be careful, take your profits. Make sure you fed the ducks on all those winners from the past few weeks when ARK was ramping, right? So look out for a bearish follow through today.
Steve, I think this is a compliment. I'm taking it as a compliment on your behalf. That comment. Speaking of China, I just want to say we'll talk about China tomorrow on the show with Herb Greenberg. He's going to come on. He's been watching the less reputable space, basically the modern day pump and dumps, which are all stemming from China, or I guess in some cases,
I love it. I love what Herb's doing.
Europe or Africa, but there are companies out there that literally, these are quite literal pump and dumps, like your dad's, your mom's, your boiler room type stuff, but
hiding in plain sight.
Just for the modern day, they're, instead of calling you up on the phone, they're putting ads on Instagram and WhatsApp, right? So yeah, I've got a list of 4 here, like confirmed pump and dump zeros. These are they're already at 0. But it's Herb said yesterday on a call, it's like playing whack-a-mole. It's like, you whack 1 and 2 more just pop up. So there's a lot of these things out there. So just be careful. Not all China is good China, because you got some actual legitimate scams out there.
Yeah, I'm interested. I want to hear more about this. I think I'm going to get on and do a show with Herb this week or next week.
I think so too.
Love what he's doing.
Yeah.
Do we have Kenny here?
Kenny, not yet. I see we got Jeremy in the green room.
Anything on the earnings front?
I mean, just looking at the calendar here, you had overnight, you had Coke this morning, not really interesting. NXPI, not really interesting. Philip Morris, nothing's really moving. Yeah, like this is a week for like staples and industrials, right?
What's the matter? They don't want the Zin anymore? Philip Morris down 5%.
Yeah. Is DR Horton, is that earnings? Yes, it is. DR Horton's up 6% this morning.
Hey. Are we selling doubles, Fonz, on this? Are we selling doubles on the homies? I don't think you could own enough home builders. I bought an absolute boatload of nail yesterday. That's a Direxion Daily Home Builders triple.
Which I'm surprised is still around, honestly.
Options market liquidity for some of these home builders is just terrible. Rocket is very liquid, on the other hand, and that I think that might be the best play of them all. Right? If you believe in this housing theme like I do, I want to be so long housing stocks. Rocket's got like one of the craziest short interests in the market, and I mean they dominate their field. This is the largest residential mortgage provider in the United States of America.
I think second largest technically.
They're second. UWMC's first. Go buy that piece of
shit.
Dude,
it's a 1A 1B situation. Don't even get the people started. There's like a huge rivalry there. I'm
not even kidding. Forget about it. I don't care about the rivalry or who sells more mortgages. UWMC has been down on the ground since it gapped lower on its last earnings report, coiling so tight. Can I get a volatility squeeze indicator chart on the UWMC? We got to look at this. I mean, this thing is so coiled. Look at momentum. Beautiful bullish momentum divergence there. I think this one's about to absolutely erupt. The stock could double in no time.
Oh boy. Well,
by the housing stocks. They're not going to fire Jerome Powell. I got to tell you, Janet Yellen doing the rounds out here this morning, defending her old friend at the Fed. And I am just so grateful that I don't have to listen to her talk every other month anymore.
It's not just her. It's kind of everybody.
Her voice is like, what the fuck? I don't know what happened there or why she talks like that.
Well, she's old, man.
It's the worst voice.
She's 78 years old.
I'm not picking on Janet Yellen. I was saying last week, I think Gary V. How does anybody listen to that guy either? Talk about bad voices. I can't listen to this. If you like a voice like that,
I'm not going to criticize someone's voice. Your voice is your voice.
Jerome Powell, great voice.
Although I do like Kenny Glick. I do like your voice.
Kenny's
Are
got
you,
a great voice.
Kenny, are
Jeremy
you here?
Schwartz, excellent voice.
Yeah.
Only good voices on this show.
Kenny, can I bring you on? Screw it. Let's just do it and see what happens.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold
up. Kenny, you're here?
I am.
Okay, your camera's off. I can't see. Oh, there we go.
I'm here in spirit.
Excellent.
What's up? We're talking about voices. What do you want to see? With arms wide open.
Yes, that's exactly what I want to see. What are we buying today? We're buying Coles up 10%. We're buying we're buying the dip in QS down 10%. What are we fading?
I don't know. I'm looking at Pulte Homes. I'm looking at Coke today. I'm looking at
you are not looking at, you're looking at Coke. Coke down 0.67%. That's Coke.
Right. That's right. Because it already defended its whole number at 69 and looks like a buy already. Yeah, we're going back. Have you heard I've got this trade that hasn't failed in like 3 years, and it's like got an 80% track record.
The earnings reversal.
Yes.
Yeah.
And because
I've
of these S-bets and Trons and all these crazy stocks, I've been very distracted. But meanwhile, if you've gone back, I've only had 8 reports so far that I've traded, and all 8 has provided a winning trade using just the VWAP and the multi-day VWAP. So I'm going to go there today, and I'm trying to make sure everybody doesn't forget that this is earnings season, and we're supposed to be looking at these earnings reports. But these shiny objects going by, there's too many now. We're having squirrel syndrome. There's so many stocks ripping by. Strazza probably named 2 more that are about to explode. I mean, every stock that's made the turn coming out of those doldrums has ripped like open. And this stock was we were riveted by it. 2 billion shares traded on it yesterday.
That's like the whole float and then some. Yeah. That's the whole float many times. Okay, so you're looking at these earnings reports, testing the view up, and reversing the early move. So this morning you have Philip Morris, you have Lockheed Martin is down 7% give or take this morning, right? So you're looking to buy that one.
GM already had the bounce. Coke's in the process right now. So again, I don't go crazy in the pre-market. Couple of hundred shares usually on some of these stocks, especially the big ones. But just keep an eye on those, because when the market opens up, you'll get those patterns to reform, and then the options become a little bit more viable around 9:45. Difficult to trade options at the open. Obviously, you guys understand they'll keep the spreads open. But for you crazy people out there, we got a new one. Werachatu. HTOO. Let's go, people. Werachatu.
Hold on. HTOO.
And if you know the reference, I'll give you a free 2 weeks in my chat room. Werachatu. I'll give you a hint. It's a cab driver. And Bill Murray was involved. Werachatu. HTOO. Yes.
Is it like what? Is this like What About Bob?
Close.
Damn. That's my only guess. Sorry. HTOO. I don't even want to know, man.
I don't even want to know either, but I saw the symbol go by and I said to my son, I'm like, there's the winner. Watch. Just wait. Let's hopefully it goes under VWAP. We get to buy it again. And it did. And it faux show broed and actually went from about 10.66 to 15 just now. So I'm sure it'll be one of these pump and dumps that roll over and die. But I'm a fan of Halliburton. I know it's not a great, stock to trade, but it's just slowly going down. It's got no volume on it today. I'm going to wait for the turn, see if it, comes down to that 20 area.
Halliburton. There's a blast from the past if I've ever heard one.
One of my favorite stocks.
There was a time where that company was in the news every single day because of a certain vice president of ours. We won't name names.
Empire. Yeah. That's why I owned it.
That's 20 years ago we're talking about.
But you know what? Every time the market crashes, that stock is a great buy. Every time. So I've been around long enough that, even one of the first stocks I ever bought was Halliburton, because I read about the company back in the day with Apache, APA. That's how old I am, and Alcoa.
All right. Kenny, wait. Give us the answer. What is it a reference to? Not What About Bob? What is that?
Quick change. Bill Murray.
Quick change?
Werachatu. It's a young Tony Shalhoub as a cab driver. He doesn't know where he's going. Werachatu.
Wonderful.
And so there you go.
All right, hitthebid.com. Kenny's there right now trading basically from 8 o'clock in the morning all through the open and beyond. And you can be there too with him. Trade with him, catch his trades when he makes them, follow him along. hit the bid.com.
Hey, let me know if you want to do that thing at 11.
I will let you know.
All right, I'm ready to go.
All right.
Peace.
All right, let's bring on today's featured guest, Mr. Jeremy Schwartz, the Chief Investment Officer at WisdomTree. He is here. We have his charts queued up. Let's do it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Jeremy.
It's good to see you.
Hey,
How's it
how we
going?
doing?
Excellent.
What's new?
You know, another day. Enjoying the summer.
Been getting around any conferences these days?
In Maine, in August, I do the Cam Kotak trips to Maine. I've got a lot of things that have come from that trip, so I'm looking forward to that in a few weeks.
Oh, cool. All right, so listen, let's jump right in. The guys on the analyst team wanted me to ask about DXJS.
So it's interesting. We converted that to OPPJ. So it's an old ticker. It's one of our, we had DXJ, sort of flagship currency hedge Japan,
Yes.
so all the large caps. And, basically we saw the small caps as a little bit too narrow of a fund, and we converted it basically a few weeks ago. So OPJ, sort of brand new ticker. And actually half of the portfolio is the Buffett stocks. So like Buffett's got these 5 Japanese stocks that he bought, and he said at his sort of retirement party meeting that he doesn't own enough of them, that he's constrained at owning 10%. He wishes he could own a lot more. And so this fund
Those the banks? Those are the banks he owns?
they're like these trading companies. So they're
Yeah.
basically like they're actually like mini Berkshires, really. Like they have their hands in everything. They're known for commodities, but really, if you want to get into Japan, they're basically the deal partners of the world. So a lot of them do have commodity links, but they really have data centers. They're really in all sorts of different links to the whole economy.
No, that's great.
And
then
there's like 5 of them. Is that
There's
right?
5 of them. So so OPPJ,
Morabini, Sumitomo, right?
Mitsubishi.
Mitsubishi, Itochu.
yes. So we put 9% weight to those 5. So it's 45% in those. And then basically we tried to say the future, Buffett stocks. So basically companies who have high shareholder yields, good valuations, some of the best earnings growth as the key story. So there's basically, and then also you have the exchange saying if you have a low price to book, you need to take action doing dividends or buybacks or all these actions. So there's like 2 systematic strategies there.
Wait,
Wait, the Japanese exchange says that?
Yes, it's a big story. It's been like the last few years, they were basically, the exchange was pressuring companies, get your price to book above 1. And so
they want them to return capital to shareholders.
Yes. I mean, Buffett was setting an example on these stocks, and they did a lot of dividend growth and buybacks, but the exchange itself is saying, you guys got to get your acting gear, and you have too many bloated balance sheets, too much cash there, too many cross shareholdings, and it's a whole big theme.
I don't hate that. So this is, just to be clear, everybody, I don't think we brought the chart for this one, but this is cool. This is the WisdomTree Japan Hedged Small Cap Equity Fund, OPPJ, and it's a play on these trading companies that everybody's been talking about. Warren Buffett accumulating, for years now. It's a huge bet that he's making in the Berkshire portfolio, breaking out, retesting a shelf of old highs. And then you guys also have the unhedged, which is DFJ.
Yes. So this basically was a conversion of the small caps to to the sort of new Japan opportunity strategy. It's a bit different fund now, but this is one we've had for 20 years. I mean, we launched this in 2006, and basically it said, not just the global companies, this is the sort of broader market and sort of the smaller companies there. So it's definitely a different strategy today than the OPJ.
This is not heavy the trading companies in the same way that OPJ is.
No, OPJ, the big question on Japan is really the yen often, so like in DXJ, you have no yen, you're hedging the yen, you're getting paid 4% carry, which is very much like the Buffett trade. The OPJ is going to have a bit more flexible approach, so it won't be fully hedged or unhedged. It's going to move with momentum. We're going to have we have a sort of technical tactical signal that's going to adjust every month based on the trends in the currency. So it's sort of a middle ground between the unhedged and the hedged. And, I think that's sort of a more flexible approach.
So what about you, Jeremy? If you had to pick one, how do you feel about the dollar and the currency markets these days? I mean, there's a nice base in the yen here. Do you want the yen exposure or you don't want it?
So DXJ has been like my flagship holding for Japan since we launched
so good
for so long. And people have gotten these currencies so wrong. I have been starting to buy OpJ because I love the Buffett stocks and I love that concept. So I'm probably moving half of my DXJ to OpJ effectively.
Really?
So it's I view it as that strong of a core proposition from us. And, it will be, we'll help you make the call of how much yen do you want. Like right now, it's a little bit, it's not as hedged. It's under 50% hedged. So it does have some of the yen, but it'll move. Like, so if the yen starts weakening, you could say the election this weekend, they're sort of revolting against the consumption taxes. They're sort of Shiba lost some ground. And you could say maybe this is yen negative. I mean, it went up a bit on the news, but I don't know that I'm a buyer of the yen on the election.
Wait, so Jeremy, you guys are actively managing the yen hedge. You're not simply just hedging out the entire.
Yes, OpJ is more active in the currency hedge.
Super cool. I'm going to add some of this to my portfolio today as well. I've been, thinking about, hearing about, writing about these Japanese trading companies for so long. I had no idea you guys had a vehicle like this.
We just did it. It's 2 weeks old, so it's great.
That's awesome. All right, very cool. Okay, let's stay in Asia because we have some other really interesting funds here. Asia's been catching some flows. It's not just China looking good. The emerging markets, ex-China indexes are starting to break out. You guys have a couple like this. Let's go to the start with this WisdomTree China X state owned. What is this? Why X state owned? What does that mean for investors? This is the CXSE.
Yeah, we've been very active in sort of retinkering some strategies. So
I've China one first. Sorry.
So China CXSE. We started, very interesting on the backstory of this fund. Before Bob, I saw you talking Baba right before I came on.
Fan.
And before they added Baba to MSCI, I remember talking to people before that happened. We had a high dividend fund. It didn't have any of those tech companies. And it was like, how do you get more tech into the broad indexes? And so CXSC was like the first ETF to hold like BAWA basically back in the day. But awesome. I think my positioning, I've been thinking about it like, is anything in China really not state influence? I think we have to work on the branding on this concept one. But it's basically, it's going to be underweight the banks, it's going to be underweight the energy companies, it's going to be tilted. It's like a core fund tilted to tech is the way to think of this. And for the broad EM, it's the same idea. So the XSOE that you had a previous chart was trying to get you more to the private businesses and basically, when we first launched it, FXI had 50% banks. And we're saying, how could you be different than just owning a lot of the Chinese banks? You want the Babas and the tech companies and more of that than the way they traditionally did market cap indexes.
So financials, utilities, the energy, typically state-owned, and then the tech companies, they say, are free.
Yeah.
And this isn't just a China problem. Go to the other one, the XSOE. This is all of emerging markets, right?
Exactly.
Same sort of
Yep.
policy.
So it's basically try to tilt towards the market, but removing the really state companies. So it's going to tilt you more to tech, consumer, away from banks and energy is really what happens there.
So I think it's important. Emerging markets have arrived. Developed markets really kicked off the bull market internationally, but now you're seeing investors move further and further out on the risk spectrum. They're starting to favor the more offensive stuff, things like China, Southeast Asia. We're talking about Latin America all the time now. I think it's time to buy emerging markets, and there are a ton of options. WisdomTree, you guys have, a huge suite of emerging market offerings. You could do China, X-State, emerging, X-State. Do you have any others?
One that we just sort of like where we converted the Japan small cap to OpJ, XC is our ex-China. And we're doing a new family called True. So we call it the True Emerging Market. So XC we rebranded as True Emerging Market. So we just did that in the last few weeks. And
what is the ticker?
XC. So for ex-China, basically, but it's, so we're calling it the true emerging markets. And we've removed Korea and Taiwan from that also. When you go to Korea, it does not feel like an emerging market economy. It feels very developed markets. Taiwan also, very advanced. So like the definition of what's developed, what's emerging needs to be updated. We're going to also work on a developed fund as well. And so that'll be some interesting takes in that one also. But this one, XC is now 35% India. Like we put some caps at India because that's, it's once you remove out China, Korea, Taiwan, that's like 58% of MSCI. Once you remove them, India would become a very, very big part. I think we're going to have to update some of the other smaller countries. We're going to want to add some Middle East countries to it that we hadn't been putting in. But I think that's some new opportunities for it as well. So it's going to evolve. But today it's 35% India and a smattering across the rest of the emerging markets.
Well, MSCI's got to get with the times because I think they have a couple countries, not just South Korea, right? That maybe they're the only ones still considering as emerging.
Korea and Taiwan are both big ones.
Yeah.
And with all that's going on in Asia, I think that's an interesting one to contemplate.
Throw up the ratio chart. So it's important to kind of choose your fighter and pick the right vehicle when you're trying to express a thesis on themes like this around the world. This is CXSE KWeb, right? So they're similar, but one is just X state owned. When I pulled up the charts, I said, wow, CXSE looks a lot like KWeb, right? It's basing, looks like it's about to complete a primary trend reversal. But at the same time, it looks like it's completing a trend reversal against its peer here, KWeb. So that's interesting. One way to kind of choose what kind of fund you want to be in, obviously we want to be in the leaders here, is just chart them out against each other like this. You could do this for free, TradingView or any of these different charting platforms. So this is interesting to see kind of this shift here in trend, just as China's kind of waking up.
Yeah, it's interesting, sort of the broader version of the market versus just the very tech-specific version that they have in KWeb. Like we're tilted that way, but it's got a broader part of the whole economy.
Now, CEW, I feel like we talk to you about this one every time you come on.
Yes.
One of our favorites.
Yeah.
We did our monthly conference call last night. I'm talking about this CEW chart. For me, this is risk appetite. To see this breaking out, hitting new multi-year highs, these are the riskiest currencies in the world. And WisdomTree has a fund for it. This is CEW. What's in here, Jeremy?
This is my biggest frustration that it's not much bigger because it's such a great, we've had this for 15 years and it's like 11 million bucks, so it should be so much bigger than it is. Like the dollar is like a big story and you guys are my hope on keeping this thing alive, but it's not.
We need it for the information. I mean, we've been looking at this fund. It's a part of our process now. We can't lose this one.
I'm fighting for it with you guys. It's a tricky one because, we've been at it for 15 years and nobody's cared. Now you could say, it's been 15 years of not been a weak dollar environment. It's been a very strong dollar environment. So the fund hasn't had its moment, but it's effectively 15 currencies equally weighted. You get the short-term interest rates. This is one of the things on the dollar where people say it's expensive to hedge currencies. I'm like, well, no, you're paid to hedge the yen. You're paid 4.5%. Here, you're going long these currencies and you're long the relative interest rates between those countries and the home market. So you get a little bit of extra juice on top of the treasury yield.
You're owning the treasuries through this fund?
You own treasuries plus forward contracts.
Cool.
So for every currency, that forward contract bakes in the relative difference between the interest rates and their markets.
Yep.
And so you get paid a little bit of juice on top of it, but you'd be surprised, like the cost, used to get double-digit yields in these countries. The spread has come down in some of the markets like China and Taiwan and Korea. The Asian currencies, the spread's not high. Still, like in the Latin America currencies, you'll get more spread. But the real yields, like the inflation-adjusted real yields in EM is the highest they've been in really probably that whole time this fund has been live. Their interest rates versus inflation is definitely some of the highest levels, and that's sort of the part of the catalyst for these currencies.
What you're saying is yet another example. This fund is breaking out to new multi-year highs. This chart looks absolutely incredible. Jeremy's saying nobody wants it. This speaks to the broader sentiment for emerging markets. It's been going on my whole career. It's gotten much, much worse just over the course of the past few years. China's uninvestable. Nobody wants these emerging markets. Brazil, same way. People don't want these assets. I think the market, the positioning right now is so offsides. Just as we're seeing these primary trend reversals, we're seeing participation expand overseas. Take a look at these emerging market funds, these emerging market vehicles. Investors are really sleeping on this theme. Are we seeing any sort of fund flows? Like, what are you guys seeing from a fund flow perspective for these international funds, particularly the EM ones? Getting better at all?
It's interesting with the rotation you had to start the year. It's like, are people, you saw with the dollar going down, and you really haven't seen it. I'd say people are still, if you just compared even the market cap weight of the world, it's now like 70% US practically. I mean, it's maybe a little bit less than that, but the flows were not even though you saw a little bit of positive flows to Europe, to some of these other countries, it's nothing. It's still underweight they're still overweighting the US on a relative flow basis. Large caps, NASDAQ, growth, everything is taking money. Foreign is taking a little bit, but it's still very, very modest. The money is not really moving to international yet.
But the developed flows continue to be fine.
A little bit more to foreign large cap, a little bit more, but it's still underweight their representation, I'd say. Like, they're still overweighting the US on a flow basis this year.
This downtrend has been in place for so long. I'm talking about just international versus US stocks.
15 years.
This is going to take some time, right? Yeah. This is like turning a tanker. So
I think some of what happened this year is like Europeans bringing the money home. So like all this new defense spending, like we had a breakout in Europe. Like maybe our most successful fund we've launched in 20 years was the European defense stock. So we actually just launched in the US too. WDEF, European Defense. And so it took in $3.5 billion in 2 months. So this fund is like the theme of the day. Yep. And it for sure, I think we launched it the week that Zelensky was in the White House, and Trump said, you guys aren't spending enough on defense. And we came back, and every day this fund has taken in, 30, 40, $50 million. But
I love this. Yeah. It's great.
We just brought it to the US, after the big success in UCITS World. But that was driven by Europeans being underweight their own defense stocks. And I still think, half of the institutions are still not even allowed to buy their own defense stocks because of their ESG rules. That these, it's viewed
still?
As yes. So they're starting to with our fund. Our fund was the first one really that they started to change some of the rules, and there's the whole thing going on right now. But the rules have prohibited them, so they've got to update their mandates. A lot of the pensions, they don't happen overnight.
This is a mega trend, these defense stocks, these European defense stocks. Everybody's out here launching AI and space and exploration funds. Good for you guys.
Yeah. Wait, Jeremy, I wanted to ask you, can we pull up, what slide is it? Slide 10. This is the chart you sent us of the SP 500 forward PE ratio. What should my interpretation of this chart be? I'll let you tell me.
Yeah, so I've got this new deck. We've started doing a lot of daily dashboard. This is going to be on a sort of cleaner up version. This version will be on a new dashboard on our website update every morning. And what you heard this week, Apollo is out there with their daily notes. Torsten put out a piece saying the tech of AI today is a bigger bubble than the 2000s. And the professor I work with, Jeremy Siegel, he called the tech bubble in 2000. March 14th of 2000, he wrote an op-ed, big cap tech stocks are suckers bet, like 2 days from the peak of the NASDAQ. That's awesome. And he had 9 stocks in his op-ed in the Wall Street Journal, 9 stocks, triple-digit PEs, and he said you can never justify these valuations. And I'd say today is nothing like tech in 2000. Like if you look at this chart, which we basically tried to reclassify tech, the current definition of GICS tech is Apple, Microsoft, NVIDIA. It doesn't have Amazon, doesn't have Tesla, doesn't have Meta and Google and some of the other sort of comm services that they reclassified. But back in the day, it was well over twice as expensive as where it is today. Twice. I mean, you see almost 60-ish PE back in 2000. Now we're at 30 forward PE. And yes, this is higher than 19 for everybody else in the S&P, but these companies have been growing at more reasonable or at much faster rates for sure for the last 5 years than like double the growth rates of the non-tech companies. And now the question is going forward, they won't have they won't have the same spread, and the spread for the Mag 7 or just this expanded tech is compressing versus everybody else, but it's not a bubble of the likes in the whole market like you had in 2000. That's my big proposition.
No, and back then, right, the big cap techs really did go crazy on a valuation basis. Right now, I think the mags, if you look at like the PE ratio of the mags index, which is the Magnificent Sevens the basket, it's closer to 25. So actually, the other tech stocks are more expensive, right? Not the
Yeah.
AI.
The one that expanded tech is not so different than when I look at the Mag 7 on the way I calculate. I see something very similar to that 30-ish number.
About 30. Okay. Still not crazy.
It's not crazy. It really isn't.
Not in a bubble. Breaking news, everyone. You heard it here. Not in a bubble. Okay.
Tweet it.
Jeremy Schwartz, thank you for hanging out. We appreciate you taking time this morning, being so generous, and with the charts and with the insights. And guys, any questions, reach out to Jeremy. His links are in the description. His Twitter, his site, all that good stuff in the description. Check it out. Jeremy, thank you so much for hanging out today.
Always great to be on with you guys. Thanks so much for having me.
All right.
Thanks, Jeremy.
All right.
Pleasure. Always learn something new. I'm going
Yes.
to buy this OpJ. I think that's absolutely just awesome that they're doing that.
Yes.
Who wouldn't want Buffett's Japan portfolio? How good is that?
I was actually thinking about Buffett the other day, or not Buffett, Berkshire. I was thinking about Berkshire the other day.
You were thinking about him? What were you thinking about?
I was thinking about Berkshire. I was thinking, when are we buying that dip? Is what I was thinking. This is actually what I was thinking.
I don't look at this stock enough.
Yeah.
Why is it trading like that? Why does the chart look so crazy?
This is the answer to the question that's been asked for decades: is what will happen to Berkshire after Buffett retires? Well, you got that initial dip, and then they bought that pretty much right away, and then it's been a steady decline since then. So
boiled up. It's not really a bull market vehicle, in my opinion. I could say
that's one way.
JC would scream at me right now, but
that's
not.
One way to justify it, because the cash flow and the dividends and all that jazz. But it's kind of it's mega cap stock. So
it's quality though. We want the trash.
Well, yeah.
I'm only half joking.
Yeah. All right. What else did I want to say? I had some other stuff.
Some charts here.
But then I got too wrapped up in the I got too wrapped up on the Jeremy thing, and I lost my focus.
Got some movers this morning.
Is
Replimune down 75%? I think.
Wait, no, I don't care. But that's is Kohl's getting taken over? Did that just happen?
Sarepta just keeps killing people.
Sarepta's in danger. Sarepta's in danger. We didn't talk about that the other day, but is Kohl's getting bought right now?
Yeah, there's rumors right now going around. Let me see.
Did that just happen? I think that just happened.
How much is it up? It's saying social media mentions is all I'm saying, but something just happened clearly.
Yeah, it's up freaking 70% this morning. Also, I was talking about Font this morning, looking at MEDP MedPace Holdings. How often do you see a company? Yesterday, this company was almost $9 billion. And then today it's up 50% in the pre-market. So it's gone from 9 to 13 and a half in one overnight session. You don't see that. Typically you see a 50% move. The company is worth $1 billion, like Kohl's this morning, 1 billion, 2 billion, a few billion, but almost from 9 to 13 in one day. That's a lot of billions to grow in one day, in one overnight session. So that jumped out to me.
What is this MedP?
They had, all I know is they had earnings. That's all I know.
This Open Door also, I don't know what the hell's going on there.
Well, look, this is you have to know if you're trading the junk, totally fine. You have to know that can happen at the close yesterday. No, well, not what time was it? Was it 3 o'clock? What time was it? 2:30, 2 o'clock, whatever. The afternoon. You have to know that that's going to happen, right? They are going to pull the rug out at some point on all these things, right?
DR Horton is absolutely raging here. I think this is as good of evidence you can get right now that home builders are failing this top and going higher. Pulte Homes also up this morning. Home builders as a group are failing this top and are going to look more like semiconductors in the future. They're about to go into a major rally phase. Okay. They have so much catching up to do. The big home builders are coming out. They're reporting earnings. The market is loving it.
Sorry,
That's what
I heard that, but I misheard it in my head. But
the market is loving it. Pulte Homes, 8%, highest level since God, I don't know when. January? The home builders have arrived. You need to own the Rocket, you own the Zillow. I think you buy this coil in the UWC.
Find the laggard. Lennar is only up 5% this morning.
I'm in Lennar. Florida has some more unique problems than some of the others.
Toll is up 3.5. Yeah, find the laggard. Your KB Home's up 3.
The way it does. Toll Brothers looks great. Dude, buy the nail. If you guys want to trade this, like I'm looking to trade this, I mean, nail's gonna get you done. That's a triple. I wanted to ask Jeremy what he thinks about all these double individual stock funds. I forgot. You got to buy the home builders, Spencer.
Apparently, you got to buy retail this morning too, because every retail stock is up. Maybe on this Kohl's thing, but dear Lord, you look at Macy's. I'm looking at Macy's. I'm looking at Guess. I'm looking at what else do I see this morning? Maybe that's it.
This BMNR Bitmine, everyone's talking about it. ARK Invest acquires 182 million of Bitmine immersion.
That's not the same as Bitfarms, which is up 10% today.
Which one of these crypto treasury companies blows up first in the bear market?
We had that chart a few weeks ago showing the number of companies that have crypto in their treasury. I'm gonna guess a decent chunk, maybe half of them blow up at some point. So don't even worry about it, right? I mean, Bitfarms
worry a lot.
Yeah. I saw a great image. I'll tweet it out. I saw a great image last week. It was from some Silicon Valley publication in the mid 90s, right? And it was one of those things. It was a map with all the different companies all over the map, and it was fun to look at. Okay, who's still around as a standalone company, right?
That's
and
cool.
Out of like 30 pictures on there, like 8 like still around, right? Apple was on there, AMD was on there. I can't even remember anymore, but I'll find it. I'll tweet it out this morning.
On to this point, very different time. Superman in the chat. Nvidia's PE is 51. First of all, no, it's not. Second of all, look at the way Nvidia is growing their earnings quarter after quarter after quarter. Be careful what price to earnings, what earnings estimate you're using for their PE. In other words, their trailing PE.
Is 55, but that's not the most important thing.
The trailing PE is going to be a lot higher when you're doubling and tripling your earnings, right? As you look out a year, 2, 3 years. So you do want to go forward a little bit and value a company like this based on probably what it's going to earn next year or even the year after. That's what the market does.
Forward is either 33 or 38. I can't read. It's font. It's font is too small to read, but it's in the 30s at the bottom line.
So here's what Spencer just said. Jeremy just came on and basically showed us that the average tech company forward PE multiple is about 32. Yeah. Nvidia, Spencer, what's their growth rate? 100%? What's their trailing 12 earnings growth rate? Pull that. Okay. You're getting a company that has redefined the way that companies can grow, at least at this size. Never seen this in the history of business, right? For a market multiple. It's no more expensive than the other ones if it's got a 33 PE. Just as expensive as its peers. But look at the growth. Taking over the world.
Gotta look forward, can't look back.
Nvidia is a freakishly cheap stock. And it really has been the whole way. It's not euphoric.
All right.
I'll be out here bitching about it when it is. Trust me. This isn't crazy. You want to complain about a growth rate on a company like Palantir?
Fine.
Right? I'm not going to give.
You want to complain about Palantir's valuation? Go for it.
Shopify. You want to tell me that's crazy? All right, I'll give you that one. I'm not giving you Nvidia. Nvidia is not expensive. This is a cheap stock.
All right.
Price
All right,
chart
let's
doesn't
get
tell you how
out of
to
here.
price the
Steve
company.
has doubles to sell. I have Babas to buy. So let's hop. We'll be back tomorrow.
Home builders have arrived. Make sure you own the housing stocks, right? The markets, industry groups of stocks don't bottom on good news, right? So everybody's screaming about real estate and the problems, right? With the housing markets. That's the time when markets bottom. This is the time to pay attention. I think there's a massive catch-up move brewing. I cannot own enough home builders.
All right, Jeff Mackey going live at 1 o'clock today. Speaking of retail, so we'll have a lot to discuss with him. What are my options? Sean's new option show going live today, 3 o'clock Eastern time, right here on the channel. And that's what we got. We'll be back tomorrow morning with one Herb Greenberg. So thank you for watching. Thank you, chat, as always. Give us a like, give us a follow, contact us, email us, call us. I'll put our stuff up on the screen right now. Where's our contact info? Look at that. Email, phone number, it's all right there. Thanks for watching. Go make some money, all right?
Bye, guys.
Adios.
I can't take no loss. I don't even know what it costs. I hit the ground, then I